In this video, I'm going to show you a swing trading strategy using UPRO, which is a 3x leveraged ETF based on the S&P 500. This strategy was able to generate 35% returns on average between 2010 and 2020, with a max drawdown of about 13%. It only had one negative year and made on average only 20 trades per year. I'm going to be using Wall Street IO in this video to analyze the strategy. WallStreet.io is a backtesting platform that allows you to test trading strategies using the last 10 years of historical stock data. So we'll start here on the backtest screen. I'm going to start with the strategy that is in one of my other videos for TQQQ, and this strategy is using Heikin-Ashi candles. And Heikin-Ashi candles are basically a candle that captures moving averages within the candle itself. It uses some formulas to calculate the high and close, a little different than your traditional candles. So that's covered in a different video. But I started here because that strategy worked really well for TQQQ, and just looking at the results of this strategy was pretty good. You can see it got on average 31.59% returns. Max drawdown was 11%. Less than a 50% batting average. But it really underperformed buy and hold strategy for pretty much the last 10 years. And it had a couple years that were pretty nasty. So in this one, 2011 got chewed up pretty bad, in 2015 as well. So looking back at it, it wasn't really until the volatility at the end of 2018, some of the Fed tightening scares, where this strategy started to even outperform the market at all. I was kind of looking for a different strategy. Went into the Discover feature, which is where you can find all these different strategies posted by the Wall Street IO community. I was looking for one for UPRO because it's an asset that I like to trade, and came upon one that used the MACD, and the MACD is, I think, the moving average convergence divergence indicator. And I'll pull this one up instead. We'll go to the backtest screen. So now you're looking at the MACD strategy, and I'm not sure exactly what all these values mean, to be honest. I believe this is where I started with the Discover strategy that was over here, and just kind of tweaked it. Stayed up for a while, just kind of playing with the different values. So this is what I came up with being some of the best. And we got a 35% return, so we increased the return about 4% from the other Heikin-Ashi strategy. Had a little bit more of a drawdown, but one of the things I like about this strategy better than the Heikin-Ashi strategy is that it tracks the buy and hold much closer than the Heikin-Ashi strategy did. And it only gives us 1 year in 2016 where it gave us negative returns, and it was only down about 3%. So we'll talk about each of these criteria. So the first one is a MACD indicator, and this MACD indicator is a little more sensitive than the sell indicator. So basically, these are some sort of combination of moving averages, again, to kind of give you a sense of where the momentum is. But then we come down here to the sell MACD, and yeah, so the sell MACD is a little less sensitive. So it doesn't give you as many signals. So it takes more price action in the other direction to change the signal of the sell side indicator. And then these were kind of interesting, kind of similar to what was in the other strategy, where at a certain point, the 12th, 9th, I think it was, on the TQQQ strategy was actually improved your returns. So a cool feature on this platform is I can just take this off and look at the effect of this, and it lowers my return a little bit. The next sell side indicator is a bearish Heikin-Ashi candle. It's actually waiting for the second bearish Heikin-Ashi candle. This is different than the TQQQ strategy, which waited for the first. If I switch this to the first, I bring the returns down about 4%. Let's bring this to the second. So this actually did improve the returns. And this is one of those things, this can be pretty tough. So these are daily candles holding UPRO or TQQQ through the second bearish Heikin-Ashi candle means there's some pretty good downside happening. So that can be pretty difficult. So We'll talk about some of these custom exits as well. These turned out to improve the strategy. If I take these off first, just to show you where we were at before them, we were at 34.71, but the max drawdown negative 20%. So one thing that I've used for a while is trailing stops, either manually or actually entered in to the trading system that just move up as the trade goes up. So that was one of the first things that I wanted to add. And then also adding a profit target helped too. So again, I played with these values for a while. You can do the same sort of thing on the platform and try and see if you can beat this strategy. So when I do this, when I take off the trailing stop, I get a higher return, but I kept that drawdown in there too. So that 6% trailing stopped me out and saved me about 7% on the max drawdown. So again, you can play with these values and see if you get something different, but this was the best strategy that I was able to find. And one of the things I added to the buy side criteria was to check to make sure that the 10-day RSI was below 80. And these values, again, were just something that I found after tweaking them for several hours and seeing what combination worked the best. And I had a suspicion that the strategy was entering trades in overbought territory, and I wasn't really sure what combination of values, so I just tried a bunch of different ones, and this was the one that gave me the best results. So the first thing we want to do is set the MACD to 6, 13, and 6, and that's the fast, slow, and the signal settings, and we're looking for a bullish signal. And then we want the 10-day RSI to be below the value of 80. For the sell side, we want the 9, 13, and 9 MACD, and we want to look for a bearish signal. Or we're looking for a 12th bullish candle or a second bearish candle with Heikin-Ashi candles. Lastly, we'll set up the 8% take profit target and a trailing stop of 6%. Thanks for watching.